Hello. This is training for beginners that have never traded before. Um, if you've traded before, you might find some of it useful, but this is extremely basic. It's one of the things people have a problem with is when they want to start trading, they just sort of don't know where to go and they just jump in and try things and things don't work out, and so they often give up. So this is for the absolute beginning trader, and that's what I'm going to do. Um, I'm going to say that you should start with Forex, and I'll explain why. If you start trading with a $5,000 account and you're trading stocks, you're going to make money if you figure out the process, but you're you're not going to make a lot of money. The amount you make trading stocks with $5,000, you can only trade the lower price stocks, and those lower price stocks are not very dependable. They can go down very quickly, and you lose your money. And so the stocks, it's difficult to trade. Another thing with stocks is stocks can crash completely, and even stocks that are high price can crash completely. When you look at some of the investments out today, uh, yes, some of them have gone up, but a lot of them go down. I was investing in a one stock, and it was $75 for the individual stock. So that's $7,500 for what's called a lot or a board lot, which is what normally gets traded. And when I woke up, it was $75, and I went to work. Came back after work. I logged on to my trading account, and the stock was at $25. And I'm like, whoa, what happened there? Because I just lost $5,000. And so I did a little bit of research, and it came out that the CEO of the company walked in the morning, dropped his resignation letter on the desk, and turned around and walked back out again. Never said it was for family reasons, didn't say medical reasons, didn't say he had a better job offer. He just dropped the letter on the table and walked out. Of course, the stock crashed. So I held it for a long time, figuring, well, it'll come back again. But of course, with what happened, and everyone was afraid of what happened in the market on that, people stayed away from it. So that loss was a large loss, and it lasted for a very long time. So that was not really a good investment, but that was a rock solid company at the time, and there was no reason other than the CEO's letter. And that just caused the stock to drop. The other thing is you can have stocks that um, are doing quite well and then they crash. For instance, the Peloton stock, that was a very expensive stock, and then all of a sudden it just starts declining. And if you're in it and you bought the stock and said, hey, this is going to make me big money, all of a sudden you're losing money. So the stock market itself is very risky. Now, the next thing I got involved with was commodities. So that's your oil and gas, gold, wheat, coal, home heating oil, things like that. And those are commodities that trade, and they trade on the futures market. So that's the Chicago Mercantile and other boards around the world. But what can happen is you can suddenly lose a lot of money on commodities too. If something happens, you figure, oh, okay, one of the things that I'm going to do is I'm going to invest in this, and then there's an announcement or something like that, and the price of the commodity goes down. If you want an example of it, and it's considered one of the best examples of how the commodity markets work, is watch the movie called Trading Places with Eddie Murphy and Dan Aykroyd. That basically sums it up. And it was a comedy, but that's how it can work. And commodity prices can swing big time based on things that are happening. So you invest in home heating oil, you're expecting it to go up, and all of a sudden it's a warm winter, and the price of home heating oil goes down because nobody's buying it, and you lose money. So there's things like that to consider. Also, with $5,000, you're limited to what you can make and how you can trade it, and so on like that. Then I learned about Forex, and this is what I think all traders should begin with. Everybody follows the same route as I did normally. They go from trading stocks to trading commodities to then going in trading Forex. And the reason is Forex, being that it's relatively new to the market, where commodities and the stock market is, quite old as far as how it works. The actual trading of currency, though it's not new, the platform that you would use to trade currency is new, the model that they're using. And that model was basically designed in the 1980s, and so they use modern technology and so on like that to their advantage. Now, like I said, currency trading is not new. If you look at the Bible, there's the famous passage in the Bible about the money changers in the temple, and that was currency exchange. You brought your currency and you exchanged it for the temple currency, and then you went into the temple and paid the money you had to pay for to the temple. So currency trading is, thousands of years old, and it's nothing new. But the way it's traded right now is new. Like I said, it's 1980 when it sort of got started. Basically trading. Before that, it was just traded by banks. You went in and you bought $100 American. The bank exchanged it and they charged you a fee, and that's what the banks did. And they didn't care about what the actual cost. It was just, they were moving money, and they charged you a fee for it. So that's currency trading, basically. But right now what you have is you have trading a board lot, which is our one lot, which is basically what is stock market or the futures and commodities market. So one lot is worth $10 with the margin that you're given to trade with. And then there's the mini lot, which is $1. So you're able to trade $1 a lot and make the money on that or lose the money on that. And then there's the micro lot, which is 10 cents per move, and the moves are called pips. And so for each pip, if you're in a micro lot, you make 10 cents. If you're in a mini lot, you make $1. And if you're in a standard lot, then it's $10. And this is the good thing about currency. Currency trades the same way, whether you're trading a micro lot, whether you're trading a mini lot, or whether you're trading a standard lot. Where, of course, when you're dealing with commodities or you're dealing with stocks, they can be affected quite a bit by the size of what you trade and so on like that. So that's basically the main reason I support trading Forex for beginners. So you start out and you're basically able to trade that, and you can set up a practice account and trade with basically play money, or as it's referred to as, it's called paper trading. And the paper trading, you're not using your money, you're trading fake money, and it allows you to learn. And you can do that with stocks as well, but you have to understand that at the end of the day, what you can make trading Forex compared to what you can make trading stocks is a lot different. In the U.S. market, there's 8,000 stocks. So each day you guessing which one of the 8,000 stocks you're going to invest in is pretty difficult. Commodities, it's the same thing. There's a lot of commodities out there. Orange juice, pork bellies, which is bacon, and so on like that. Wheat, coal, as we mentioned, and home heating oil, and gasoline. These are all commodities that are traded, and got a lot to choose from. With the Forex, there's what's called 8 reserve currencies. And the reserve currencies are the main ones that are traded in the world. So you're trading one currency against the other. So you're trading the euro against the US dollar, you're trading the Great British Pound against the Swiss franc, you're trading the Canadian dollar against the Japanese yen. So these are the reserve currencies that you're trading. So you're trading one against the other. So you're not counting on a stock to go up or a commodity to go up in price. What you're trading is the difference in price between these two things. And so, for instance, if the euro is falling against the US dollar, then you sell the euro and you buy the US dollar. Vice versa, if it turns around and starts going the other way, you sell the US dollar and you're buying the euro. So with all 8 currency pairs, you have a total of only 28 currencies that you can look at. And some people have favorites that they trade. Some people trade all 28. I trade all 28. If I see something in one currency, I jump on it. But it's easier to track 28 currencies than it is to track 8,000 stocks. So that's another reason why you can do that. So in Canada, to start trading currency with Forex, you need a $5,000 account to start with in Canada. But in other places, like in the US, apparently there are places that allow you to open an account for a mere $200. So you're not going to get rich overnight trading $200 or even $5,000, but your chances of making money are a lot better. And there's different things that you can do that you can, once you learn it, learn the patterns and so on like that, and you can do a great deal of trading and learning and so on like that. And as your account grows, you basically compound, so it gets bigger, so you can trade bigger positions. So that's the beginning of what I have to say about trading Forex and stocks and commodities. And this is going to be a multi channel sort of explanation. I'm going to split this up. I recorded the whole thing in one shot, and I found it very long, and even I was kind of bored with having to listen to it. So I've decided to shorten up my presentations, and you can walk away and come back and check out the next one and so on like that. So this is the first one in my series, and I will be following up with more. So follow the links that I have given you, and you can watch all of the movies or the seminars that I'm explaining to you. And once again, this is for trading for beginners who have never traded before. Thank you.